Hi, Mike Robinson here. In the last couple of weeks, I've been getting a lot of questions from clients as to whether they should be updating their estate plans in light of the recent election results, and particularly, what tax changes might be coming down the pike for us. I imagine you've been getting similar questions from your clients also. So I wanted to share with you a tool that I like to use in these situations. The future looks murky. I get that one a lot. The point being, there still is considerable uncertainty as to what may happen in 2021. But we do know some things for sure, both at the federal level and at the state level, that suggest that some year-end estate planning might indeed be appropriate. So let's take a look at the federal situation first. It seems fairly certain at this point that Joe Biden's going to be sworn in as president on January 20. We know that the Democrats have retained control of the House, albeit by a smaller margin than before. The wild card, of course, is the Senate, and control of the Senate is going to come down to the two runoff elections in Georgia that are scheduled for early January. If the Democrats pick up both of those seats, then as of January 20th, Vice President Harris will be the tie-breaking vote, and the Democrats will in effect be in control of the Senate. So what that would mean is that we have Democratic control of both houses of Congress as well as of the presidency. And there certainly then is a chance of Congress and the president enacting legislation similar to what Joe Biden proposed during his campaign. And that included reducing the federal estate tax exclusion amount to $3.5 million, which is where it was in 2009. Biden's plan also includes raising income taxes and capital gains taxes in certain situations, as well as some other changes. And I think that this becomes increasingly likely as the federal government confronts the huge deficits it's running because of the relief packages during the pandemic. Not only the packages that already have been passed, but those that are likely to come as well. So it's certainly very possible Congress will pass that legislation in 2021, and if they do, of course, they can make it retroactive to January 1 of 2021, meaning that any planning to address those changes really needs to be completed by the end of this year, which means we just have a few more weeks. On the state level, the calculus is kind of flipped, actually, I think, and that's because if the Republicans do retain control of the Senate in Washington, that minimizes the chances of any significant COVID relief package being passed that includes substantial aid to the state and federal governments, because that has been one of the big sticking points for Republicans in agreeing to a new relief package. And if that's the case, that's just going to put even more pressure on state governments, which already are running huge deficits of their own, having to deal with the pandemic and the resulting situation with the economy. And in New York, even though the governor at this point has expressed resistance to raising taxes, Democrats in the state legislature have expressed an intent to do exactly that. And now it appears they have a veto-proof supermajority in both houses of the state legislature, so they can pass that legislation without any assistance from the governor. What does that mean then, to clients? Well, for people who anticipate having assets of $3.5 million or more when they die, their families could be looking at a 40% tax, at least at the federal level, on everything above the $3.5 million. And at the state level, the percentages, marginal rates certainly are going to be different, but a similar result, some fairly hefty estate taxes that otherwise we would not have anticipated. So there still is time to get some planning done this year to address that situation. And of course, remember, even if Congress does nothing, the estate tax exclusion at the federal level is going to be cut in half at the end of 2025. So it might well make sense to do some planning at this time. There are a lot of different strategies that are available, and for many clients, it allows them to retain full control of their assets, full enjoyment of their assets during their lifetime, and yet protect that asset value from the estate tax. Also, if you anticipate that income tax rates, or including capital gains rates, are going to increase in 2021, you might want to look at recognizing some income this year that otherwise could have been deferred. Also, perhaps deferring deductions to 2021 when they might become more valuable. So again, we don't know anything for certain, but I see the compass pointing in a certain direction that to me suggests that for many higher net worth clients, some planning would be appropriate here at year end. If you have a specific client situation that you'd like to discuss, happy to chat with you about that. Feel free to reach out. And otherwise, I hope that you and your families and your coworkers are having an enjoyable holiday season.